Here we are live now, 8:27 a.m. Market's almost just shy 3 minutes of the 2 hour tape. We have before us a $470 call. That was $13 on the close. That was $14.80 on the high. And that we have bids out here at $3.70 for now. What we are going to look at in order to get that price entry, the following would have to occur or happen, whatever you want to use it as in price. So let's take a look at the prices on Apple. We know one thing for sure, that the 485 puts were extremely marked down when we ran up to the 480, 498 area where Apple became Apple again, making a series of $11 reversal off of the intraday high right here. So, based on Apple's price ranges, there are different, price ranges between, like, let's say 435 to 450. Then there's price ranges between, let's say, 451 on up to, let's say, that 466 area, 0.75 cents, right below 467. And then from that price area, you're going to be looking at where you are back in the same kind of reversal ranges toward the top end of the ranges within the actual dollar price movement at the closing bell and intraday, because we're $10.84 off of the high. That's $1.06 off of the low right now. In order for these prices to go lower in the 470 call, we got to break below 470. We got to break below there to get the lower prices. Right now, this particular contract was inflated, and it was. These contracts were right here. They're weekly, and I'll be happy to show this to you so that all of my new MMT market makers in the option pit understand that when we were buying these last week, the lows were $1.13 on the contract. And that was based on Tim Cook, who's been speaking at the conference all morning long, that there are some challenges with Apple right now. Shareholders want money. They want a dividend, a higher one at that. So the call contracts were totally inflated. Here was the high, 1720. Today, the low is 590 and the high is 1480. And yes, what is the interest the volume traded right now is 7,300 contracts right now as of intraday. The open interest was 10,240. All right. So basically, they were inflated. They had to come down in value. But they were a great trade when they were down here, and how the headline news was going to play out on Apple. Go back to last week's videos on the website, and you'll find out the following. Here, you will go back and you will take a look, and you'll go back and play all the Apple videos from last week. You will understand how the headline trades were made all the way up to the 485 area. Because that is the reality here. Trading breakout right here. Yes, that date right there. Today is 212. This was 27 right here. So there are probably some other ones in here with Apple. What I want you to do is go review them in price. Now, having said that, you know where to go get your history. What I want people to know right now is that Apple is very headline driven down here at the wholesale price. You never want to be scared of wholesale entries, but you have to use a much lower volume entry. Why? Because there's still a lot of headline news, and anything can be said, and this thing can just take off back to the moon again. So this is that call, 470. There are 7,400 traded right here, and this where my pointer is. This is the call chart, and you have to know that inflated calls come back down in value, and they did make a market at that lower tier level on an intraday morning level. and we're been open for 2 hours and 2 minutes. And that tech conference in San Francisco where Mr. Cook, he's really talking himself up. And that tech conference, well, you can see Apple's all over the headline, everywhere. So you know, Apple CEO Cook, with regards emerging markets, they're talking a lot about what Apple can do. And is Tim Cook preparing people for a lower growth environment, forward looking? So, forward looking isn't just today, it is forward looking in the smartphone. Mr. Cook said that the smartphone is going to be the next, there's plenty of more rollouts and plenty of more good things that can happen. And what I'm going to show you once again is that we put the bottom in. Here's the market maker platform. Says Apple 3-minute. These diamonds put in a bottom, they have a reversal. The IR is weak. You went down 0.81. That was 12.99 teenies, which is 1/16th per line, which equaled $9.49 in our system. And that's how these things are added. It's 73 cents per line. And you can see again on the alert reversal is that alert reversal is in play. Once we hit that upper end up here at the 484 level, we started that reversal within a teeny range in the system. Every time you pop down to that teeny support level, you will pop back up. Yes, you can go long, but you'd have to sell because look at, we make a lower low from here, from that diamond reversal. That's just intraday volatility. Don't worry. What you will use is the math. When this is very weak, see how the price is going lower right now in the video? See how we're at 471.23? Here's the public spread. Here's the bid and ask. That trend ratio is the market maker trend ratio. When this goes higher toward 81, as you can see that candle dropping down here, and we're going to see if we break these lows. I'm going to go ahead and blow that up for you right here because this is live right now at 8:34 with that volatility headlines in play. And when this goes toward 81, you fall in price. This has to go on 0. We are making a bottom off of 0.81. That diamond right there is exactly right at our teeny line. Each teeny is 1/16th, which equals 73 cents per line today. And you can see how this is going to be a bottom at some point. And there will be a reversal. Now, we're at 72 going toward 81. That's why that teeny line where the diamond is, it's still one teeny off of the bottom. That's 73 cents. It tells us right here, off of the intraday low, $1.22 in price, $1.24, $1.21. So that's what a bottom looks like. And you want that dollar ratio off of the bottom to stay above $1. You want it to be, or at least one teeny, 1/16th value. This is how bottoms get put in. But you're still weak at 10 and you're at 70. It's going the other way. When that goes down towards 60, 65, of course, your price will break right up. There is no lag. That's the beautiful thing about you being here. Now, having said that, we can be truthful about the price. We can be truthful about the strength of the price. And we can be truthful of what it would happen if this drops to 0. You're busting that line right here, this teeny. And it's weak because that IR is below 15 and below 25, 15 here. And 72, well, watch. Watch that number, 72. Going toward 81, you go down. Going the opposite way, you hold the support, and then you would break out. This is how it works for the people in the trading division that is using the trading capital intraday with the market maker alerts. And yes, it is done live. It is done here. It is done now. You can do it from anywhere in the world. Doesn't matter. But you will be getting it, training, and be trained correctly, and you'll be getting these orders. Remember, getting the orders is everything. You're not getting them now within a high frequency market maker model. And if you were, you wouldn't be here viewing what we're doing anyway. You're here for a reason. And we're here to help you. So This is building the bottom. When you go down below 70, you start